Welcome to the Bullvine Podcast, your go-to source for inside stories, cutting-edge research, and the latest updates in the world of dairy farming. For the 66th episode, we uncover November's global dairy market trends. So please grab a glass of milk, sit back, and let's get started with this week's episode.
As tides turn in the global dairy markets, challenges and opportunities arise rapidly, challenging even seasoned professionals to keep up. Navigating these waters is essential for those dedicated to dairy farming and industry professionals aiming to stay ahead. The sector's constant changes, like the drop in Chinese import demands or surges in European butter pricing, have significant implications. One industry veteran with over 30 years of experience in the dairy industry notes, "In the dairy world, the only constant is change, and it's those who stay informed who thrive." Remaining knowledgeable is crucial for strategizing effectively and sustaining growth amid the volatile marketplace dairy industry.
The global dairy market experienced notable fluctuations this past week, marked by variations in trade volumes and price shifts across critical exchanges such as the EEX and SGX. On the European Energy Exchange, 3,925 tons of products were traded, showing a slight decline in butter and S&P prices. EEX butter futures showed a 1.8% dip, averaging €7,276 for the NOV 24th to June 25th strip. Meanwhile, S&P saw a marginal downturn of 0.2%, with average prices settling at $2,749. Conversely, the SGX observed substantial trading activity with 20,542 tons exchanged. The market saw a mixed trend, with WMP futures firming by 0.5%, reaching an average price of $3,940, while S&P futures declined by 1.3% to $338. This mixed trend indicates the complex and dynamic nature of the dairy market, with different products responding differently to market forces. AMF and butter prices on the SGX showcased a stable trend, with AMF slightly down by 0.1% and butter inching up by 0.2% across their respective curves. EU quotations presented an optimistic outlook as butter prices climbed across various European markets, including Germany, France, and the Netherlands. The average jumped by €80 to €7,920. S&P prices also experienced an upward trend, reinforcing a broader positive sentiment within the European dairy sector. The latest data from the Global Dairy Trade, GDT, painted a similarly bullish picture, with the index rising by 1.9% and reaching an average price of $4,089. Noteworthy movements included a 3.2% increase in the WMP index and modest gains in AMF and butter, reflecting vigorous international demand. Such trends underscore significant dynamics currently shaping the global dairy trade landscape, warranting keen observation from market participants.
The European dairy market has experienced significant shifts over the past week, primarily due to fluctuations in butter, S&P, and whey prices. An upward trend in EU quotations marked the dynamic trading landscape. Butter prices showed resilience, climbing by €80 to €7,920, with notable increases in German and French markets at €8,200 and €7,610 respectively. However, Dutch butter prices held steady, illustrating regional variations within the market. S&P prices also trended upwards with an overall gain of €48 plus 1.9% to reach €2,598. The variations in S&P prices displayed marginal yet crucial gains across Germany, France, and the Netherlands, reflecting a nuanced and competitive trading environment. The overall S&P average, however, remains €44, a 1.7% below last year, suggesting some lingering market pressures. Whey prices also modestly increased, with the index rising by €3 plus 0.4% to €860, driven by a €20 gain in the German market. French whey slightly declined, indicating potential market saturation or shifting demand dynamics. Despite these upward trends, the European cheese indices painted a less optimistic picture, with declines across all tracked varieties. Cheddar curd dropped by €35, minus 0.7%, and mozzarella experienced a more pronounced decrease of €52, minus 1.2%. Mild cheddar and young Gouda saw minor declines yet remained substantially above year-ago levels, providing a mixed outlook on European cheese market stability. GDT auction reveals complex and contradictory trends, a call for urgent strategic adaptations in global dairy pricing. The latest global dairy trade auction painted a mixed picture with its 1.9% increase in the overall index. nudging the average price up to $4,089. This uptick suggests a nuanced yet cautiously optimistic outlook for the global dairy market. The whole milk powder WMP index led the charge with a notable 3.2% rise, positioning the average price at $326, despite variability in offerings like Fonterra's regular WMP-C2, which saw a $130 increase, diverging from SolarX Belgian regular MP's $110 decrease. Such disparities indicate complex regional dynamics and the influence of product differentiation. Skim milk powder, SMP, posted a modest 0.9% gain, aligning the average price at $2,882. Meanwhile, contrasting movements were evident in the butter and anhydrous milk fat AMF sectors. Butter prices increased by 0.5%, while AMF recorded a more significant 1.0% increase. These shifts highlight the continued global demand for fat-rich dairy products. In stark contrast, cheddar endured a 3.1% drop. In contrast, mozzarella plunged by 6.6%, underscoring potential shifts in consumer preferences or competitive pressures within specific cheese categories. The auction's outcomes have broader implications for global trade dynamics and pricing strategies. Rising averages in critical segments like WMP and SMP could invigorate producer confidence and shape future contract negotiations. However, fluctuations in cheese prices illuminate the volatility stakeholders must navigate, underscoring the need for agile pricing strategies to maintain competitiveness while capturing emerging opportunities across diverse markets. Additionally, the participation of 162 bidders at this auction reflects robust engagement, hinting at sustained interest, yet highlighting the competitive landscape's intricacies.
As the global dairy market ebbs and flows, regional production in major dairy powerhouses offers a glimpse into current affairs. The European Union, EU, and the United Kingdom saw milk production numbers for September climb ever so slightly by 0.2% year-over-year, reaching an impressive 12.62 million tons. Milk solid collections followed this upward trend with a 1.4% increase, resulting in a cumulative total of 2024 9.26 million tons, representing a growth of 0.6% yearly. Across the Atlantic, the United States mirrored a similar modest uptick. October's figures showed a 0.2% increase in production from the prior year, aggregating 8.48 million tons. Notably, milk solid collections surged by 1.6% year-over-year, amounting to 644,000 tons for the month. This nudged the cumulative total to 6.41 million tons, up a robust 1.8% compared to the previous year. Moving to the Southern Hemisphere, New Zealand reported a standout performance in October, with a 2.1% year-over-year milk production growth of up to 3.08 million tons. The nation continues to defy expectations, with milk solids production experiencing a remarkable 2.8% year-over-year increase. Cumulatively, the country marks a 2.1% boost in milk solids production for 2024, totaling 1,449 million kilograms, while the season-to-date figures stand out with a whopping 5.0% rise year-over-year. Meanwhile, in the heart of South America, Argentina faces a less optimistic scenario. October's milk production took a minor hit, dipping 0.4% year-over-year to 1.09 million tons. The challenges seem deep-rooted, as cumulative collections for 2024 have slumped by 8.5% year-over-year, clocking in at 8.84 million tons. The milk solid collections also reflected this downtrend, with a decrease of 0.5% for October and an annual downturn of 8.3%, up to 637,000 tons.
The declining Chinese dairy imports, registering a notable 10.7% drop in October, have sent ripples through the global market. This downturn falls within the lower spectrum of expected outcomes, starkly contrasting the robust growth in demand at one time. The contraction, particularly of whole milk powder, WMP, and skim milk powder imports from New Zealand, has accentuated vulnerabilities in the supply chain and sparked recalibrations in export strategies. New Zealand, traditionally reliant on a vigorous Chinese market, may need to diversify its export portfolio to mitigate risks posed by this downward trend. In time, the lag between import reductions and real-time market adjustments could paint a concerning picture of demand dynamics. Conversely, despite its challenges, the EU's export landscape tells a different story. September witnessed a dip of 4.5% in milk equivalent exports, a statistic bolstered primarily by burgeoning butter demand from the U.S. This juxtaposition between product lines within the European market suggests a potential realignment in export focus. With cheese export figures slightly revising upwards and whey demand surging from regions like Indonesia, there's an evident shift towards stabilizing through diversification. The significant downturn in SMP exports, nearly 17.4% less than the previous year, underscores a need for innovative pricing strategies and agile supply chain adaptations to counteract such fluctuations. These intertwined dynamics between Chinese import patterns and EU export shifts fundamentally influence global dairy supply chains. This environment necessitates strategic pricing adjustments and proactive market engagement strategies for producers and exporters. The apparent decoupling in import and export rhythms creates potential opportunities and challenges. The ability to pivot and adapt becomes a critical determinant of market success. As the global dairy landscape continues to evolve, the strategies employed today will undoubtedly shape the market dynamics of tomorrow.
The U.S. dairy market stands at a crossroads as recent USDA reports spotlight the dynamics influencing cheese and butter prices. These commodities, pivotal to the dairy industry, have experienced a marked downturn in cash and futures markets, leading to significant price reductions. Notably, the 6-month price strip for cheese has dropped by 2.2%, while butter prices show a 3.0% decrease. Such declines reflect the market's reaction to the USDA's revised milk production figures, highlighting an unexpected surge in cow numbers and milk output. From an export perspective, this price dip could uniquely position U.S. cheese and butter as competitive offerings in the global marketplace. U.S. commodities could find a solid footing as world markets hunt for affordability amidst fluctuating dairy prices. However, leveraging these export opportunities requires navigating complex challenges. Chief among these is the logistical hurdle of increased shipment volumes amidst ongoing supply chain disruptions. Moreover, the competitive global landscape demands strategic positioning from U.S. producers to maintain value and build long-term trade relationships. The challenge is to balance domestic supply with export aspirations while ensuring quality standards that meet international expectations. In conclusion, while the domestic price dip may present short-term pain, it simultaneously allows U.S. dairymen to explore broader horizons. Producers must adapt, innovate, and seize potential export markets, transforming current challenges into future opportunities.
In a week of diverse market movements, the global dairy sector experienced significant fluctuations, from buoyant trading volumes on futures to nuanced price shifts across global indices. The EU saw a mixed bag with resilience in butter and SMP, juxtaposed against weakening cheese indices, hinting at a shifting market focus toward higher-fat dairy products. Meanwhile, GDT auctions presented a volatile landscape, demanding strategic foresight from stakeholders. The contrasting trends in major dairy producers highlight the regional variances in production dynamics. New Zealand exhibits potent growth, while China grapples with declining imports, urging a reconsideration of export strategies. Amid a backdrop of price drops, the U.S. market stands at a potential pivot point, offering export opportunities that could recalibrate domestic market perceptions. As these developments unfold, how will they influence your operational priorities? Could the shifting dynamics in import-export trends reshape your strategic goals or partnership alignments? Consider if your business is prepared to capitalize on potential price rebounds or navigate lingering volatilities. These pivotal
Thank you for tuning in to the Bullvine Podcast. We hope you enjoyed today's insightful discussion. Don't forget to subscribe, share, and leave a review. Catch you next time on the Bullvine Podcast, where bovine expertise and community come together.